Hey, 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 thanks for tuning in to Person Empowerment TV. It's Shawnee and it's Money Monday. All right, sis. So I don't know how you feeling. I don't know how you feeling when you're feeling, but I am feeling in this moment, I'm feeling grateful. I'm going to be feeling grateful all November, right? I'm going to be feeling grateful the entire month of November. And I want you to join me in that simply because this year has been really demanding, very demanding, right? When you say, even if you're doing well, I consider myself to be doing pretty well, but I also still consider that this year was demanding, right? Hey, how are you? Thanks for tuning in. We're going to be talking to one of my favorite financial minds. She's someone who helps me get my financial life together. Can you believe, right? She is my tax preparer. She makes sure that I pay the IRS and make sure that I am not commingling my money. Hashtag no commingling. And hey, 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 I'm gonna give y'all a little bit of music. I don't know. My money song this month is Rooted. That's Alexa, play Rooted by Sierra. That's my money song, sis. That's my money song.
By Sierra.
Have you guys heard it yet?
On Amazon Music.
You guys heard this yet? I'm loving it. I'm typically catching on to things later than what I should. Yeah, you gotta stay rooted. I don't have to see it. Can't stay rooted. Takes me rooted. Rooted. Never hit rooted. All my songs come with credit. Got the heart, got the soul like Harriet. A queen said she born, that was evident. That's evidence of black excellence. I can tell a good dog when I'm hitting them. Know that if I had to try to be protecting them. Motherhood, child of God, I need testing them. Nutrition and brown cooking them. Alexa, pause. Alexa, pause. That's my money song. I always advocate that you find a song to pay your bills to. That way, although you may be having the experience that you are paying for things, you're constantly in the mindset that you are grateful that you can pay your bills on time, right? That you can pay your bills without being stressed out. You can pay your bills without being irritated, right? So I always use music so that I can shift my mind. So I'm not thinking, oh my gosh, it's time to pay these bills. It's time to get this money out of my account, right? I'm thinking about my ability to be grateful, right? To be grateful for my lights, for my phone, for my transportation, for my shelter. So I'm always representing and always advocating for you guys to find a money song to pay your bills to. So if you aren't feeling rich right now, if you're not connected to your abundance, if you're not tuned in and tapped in to your creativity, I'm going to do something that I do every single week. So I want you to open up your spiritual purse. I want you to open up your actual purse. I want you to open up wherever it is that you store your money, because I'm about to give you some money, honey. Okay. Now, for those of you who are tuned in every week, you know my machine be acting up, sis. And if I have to move from one step to the next, you know how they do it. Don't act. All right. Okay. So I want you to open up your spiritual purse. I want you to open up your actual purse, because I'm about to give you some money, honey. You ready? Open up. Whoa, whoa. Now that's what you call when your money machine working. I hope you felt that value coming straight at you. If that wasn't enough value for you, we are going to be inviting onto the screen in just a few moments. My tax preparer, she makes sure that I do not commingle my money, make sure that I pay myself as a entrepreneur. I always get that question all the time. How do I pay myself? And one of the biggest things that Samantha and I are going to be chatting about is preparing yourself for tax season, right? Even under the stress of COVID. So Samantha, I'm going to welcome you onto the screen so that we can get talking. Sam, do you have a money song? Do you have a money song?
Unfortunately, I don't.
Okay, so I need you to get a money song. I need you to have a money song, sis. I need you to have a money song, because my money songs helps me think about like my ability to create money, my ability to pay things on time. Like how do you feel when you're paying your bills, Sam? Like, are you moody or how are you?
I'm actually happy for the ability to be able to pay my bills on time. So
Right.
yeah, I need a money song though. That's
Okay, sis. Well, right this month, my song is rooted like Sierra be coming, like she be coming with what she coming with in that song. Like I can relate to it 100%. All right, so let's make sure that we are doing the best that we can to make sure. So all month long, I'm going to be making sure that I talk about things about money that I'm grateful for, right? As we close out this year, and because it is November, and it is a November to remember, I'm going to be highlighting some very smart things that I've done with money, people that I'm working with money, and I'm thankful, right? I'm full of gratitude. So if you're tuning in, that's what we're going to be talking about. And one of the things that I'm really happy about, Samantha, is the amount of accountability that you have given to me this year. You know, like you've made my process to managing my personal finances and my business finances way easier than what it was before. I remember just being frustrated and agitated, just not really fully understanding it. And sometimes it's just overwhelming, right? When you're managing your business, and then you have to manage employees, and then you have to manage staffing, and then you have to manage all these other things. And then you also have to manage those two things that you got to make sure that that purse keeps pace with: taxes and inflation. All right, so we're gonna be chatting it up in that way. Okay, so Sam, the first thing, what would you say? A lot of the times when I'm working with particularly female business owners, is that they are afraid to like reach out to a professional, right? They're afraid to reach out to a professional because they feel that a professional may overcharge them. They are a little embarrassed. So what would you kind of say to people who just kind of steer clear of your services because they kind of fear the cost or the concern of being exposed for their bad habits?
So I just want to thank you so much for having me tonight. You are my girl, and I just love your audience. I love you. So first and foremost, when it comes to that, I'd say throw that fear away. You know, a lot of us feel uncomfortable as it relates to finances. The money conversation can be uncomfortable sometimes, but when you seek a professional, you know, that sacred time with the professional is just that. It's private, it's sacred, it's trustworthy. You don't have to worry about. I feel like the best way I can put it is like coming to you with your pants down. It's like I'm naked and unashamed. And so just be that. Be naked, be unashamed. Know that there is accountability and not judgment, if that makes any sense.
Mhm.
To come there, be accountable, make changes, be open to change and growth. When it comes to finances, you have to decide where you are financially in your business. If you're just starting out, there are cost-effective ways. You can use Excel, you can use beginners QuickBooks Online, or you can use a Word document and just track your income and your expenses. I say as a threshold, my rule of thumb is about $50,000. $50,000, you're a independent contractor, or you're a sole proprietor, or you're an LLC, and your expenses are relatively low, but you just don't know what to do with your money. I say $50,000 would be where I would have that conversation with a licensed bookkeeper or a certified public accountant.
Okay, so you would say once you get to $50,000 in terms of your earned income from your business, that you definitely at that point should be making sure that you're working with someone else.
Yeah.
What's some of the common errors that you see business owners do when it comes to just their accounting systems? Like, what would you say the number one thing is?
So when you run a business, it's your business, you form the business, but Internal Revenue definitely doesn't just see it as your business. You have to be responsible, and you have to pay taxes on your net. And so a lot of times, like you mentioned earlier with the commingling of funds, I definitely don't always think it's intentional, but because you're not knowledgeable, you just do what you want to do in the account. I've noticed so many people use their business account as their personal account. And unfortunately, whether you're a sole proprietor, you're an LLC, or you're a corporation, you have to keep them separate. I'm going to say that again. Please, for tax purposes and for your own sanity, keep it separate because no one wants to get audited. Being audited by Internal Revenue is not fun. So keeping it separate, keeping your receipts, keeping track of your income and your expenses is definitely something I've seen business owners trip up on, especially when you're in your first 1 to 3 years. In addition to that, I say expenses that they didn't know they can write off, they're overlooking because they don't have a proper accounting system. So I'll give you an example of an expense. Cell phone. Cell phone. You use your cell phone every day for business, and a lot of times business owners pay for it through their personal account. No, that should be paid through the business account. That's another one. Meals and entertainment is no longer an expense. Entertainment portion isn't, but meals are. So if you are having a meal with a coworker, I have this thing that I say, let happy hour be tax-free hour, right? So how do you turn happy hour into a tax-free hour? By taking a coworker or taking a prospective client out to happy hour and paying for their drinks and your drinks. That's a business expense, and the entire thing is deductible. So those are little tips.
So what are some of the eras that you are seeing as relates to those that are employed? What are some of the eras that you see them making with their taxes?
So do you mean non-business owners?
Yeah, non-business owners.
So for non-business owners, the number one thing is, I need my money during the year, so I'm going to exempt halfway through the year, and then I'll put it back. Oh my gosh, can I tell you guys, please don't do that. Please don't listen to Susan or Karen or Peter that says that they do it, because all taxes are not created equal. Susan and Peter aren't telling you that they have 3 or 4 or 5 kids that they're able to have as dependent on their tax return, and you could have no kids, and you follow what Peter's doing or Susan's doing or Karen's doing and exempting when you don't have the capability to do so will cause you to owe Uncle Sam way more at the end of the year. So no more exempting.
Another thing that I see with my clients with their tax returns is that they want, and we talked a little bit about this last week, is that they want to be able to apply for home ownership. And I see this with both the entrepreneurs that I have as clients, as well as those that are non-entrepreneurs, professionals. And what I do is I see that they write too much off in terms of their income to even qualify for a house. So could you speak to that a little bit?
Absolutely. So what I would suggest to you is have that conversation with your tax professional. Let them know, okay, Samantha, I am interested in purchasing a home within the next year or 2. Once you provide me that information, I will steer you and tell you, hey, try to avoid writing off as much this year or for the next 24 months. Because what that does is the more you write off, the less you qualify for. In addition to that, I would say speak to a mortgage broker, someone who will be writing the loan, and say, hey, this is how much I am able to afford on a monthly basis. What income, what income should I be, or where should I be with my income? And they may be able to explain that to you. So you may have made $100,000, but they say all you need to have is about $70,000. So that gives you a $30,000 wiggle room to write off expenses. But if you don't know because you didn't speak to your mortgage broker first, then you'll be writing off, and then now you won't be able to qualify.
Right. Right. I see that very often with my clients, is that especially with the entrepreneurs, they're trying to get as many tax deductions as they possibly can. And then they end up completely delineating their income, and then they can't qualify for a home that they really want. So I did want to speak to that point. Another thing, Sam, that I hear with my clients that they do, a lot of my business clients, they like to buy cars and they go, I'm just going to write it off. Like they lease. They purchase cars and they go, I'm just going to write it off. Can you speak to that a little bit so that there's a little bit of wisdom that's applied with that tax credit?
So I would say be careful with that. When it comes to writing off, when it comes to automobile expenses, you have to be careful with that. Make sure that the car is, if it's not in the business name, then you are making sure that all of the expenses are business related. So making sure the oil change, like not really just business related, but the majority of the time that you're using the vehicle is for business purposes. So if you are going to Susan's house or Peter's house, you can't count that mileage. But if you're driving to different clients' homes, you can write out the mileage. So it's either two options. You can either write off standard or actual. You can't do both. So what the standard is you are picking the mileage versus your actual cost of the vehicle or the expenses or the oil change or the tires. I personally prefer standard, which is the mileage, because I do a lot of mileage. So it's like, I think it's like 59 cents, 57 or 59 cents per mile. And if I do approximately 18,000 miles a year, you times the 18,000 and the 57 cents, and you get the total deduction. As opposed to me having lease payments and I have $300 a month payments times 12, that won't equate to the same. I won't get as much of a expense as I would if I were to do the standard. So speak with your tax professional, talk to someone first. Don't automatically assume you can write off your total car payments. That's just not how it works.
Right. So a lot of the times, right? So when I'm working with my clients and we're looking through their budget and they always go, oh, the car, I'm getting ready to get a car and I'm just going to write it off through my business. And I just want them to have a little bit of clarity about that, because and sometimes they think that this is a dollar for dollar when it's a tax credit. You know, it's not, okay, you pay $600 for the car, you get to write off a $600 car. It doesn't work that way.
No,
yeah. So
not unless it was purchased under the business name, which is very difficult to do because your business has to have its business credit. And then number two, if you lease it, yes, you can. Again, leasing under the business name, not just leasing under Samantha Porter. It's not how that works.
Got it. All right. So how much are you thinking, Samantha? Are you thinking that COVID is going to impact tax season?
Oh, yeah, for sure. The number one thing is a lot of earned income tax credit taxpayers, which are people that have dependents. They don't realize the earned income credit is just that for those who are earning income. A lot of people are on unemployment. Since March, you're on unemployment. So what happens with that unemployment? That unemployment is taxable, but it does not afford you a refundable credit for the earned income credit. So we are going to hear a lot of people crying come January, February, because no one's telling you that. Now, we do have less than 60 days in the year. If I were you, I would get either a part-time job, I would work at Uber, wherever you can grab, do some self-employment. You have to have earned income before the year's end, or else you will not qualify for the earned income credit for your children. So please be careful with that.
Okay. That was good clarity on that. The type of delays that we are going to possibly experience, are you predicting that due to COVID that there's going to be, delayed for payouts for people that are actually going to qualify for refunds?
I don't necessarily think that there are going to be delays. Every year, Internal Revenue has been pushing back their refund due dates. Mm-hmm. So I would suggest that you don't account for your funds till the end of February. There are options through paid preparers where we give advances. Again, be careful. You should not be paying astronomical pricing because they're offering you an advance. Be mindful of predatory lending. It's real. It's out there. Be mindful of it and don't fall prey. So just do your homework, do research, make sure,
Can you give an example of when you've seen one of your clients get had by predatory lending when it comes to taxes?
Absolutely. So when they say, hey, get your money now, you can get an advance for $6,000. You have one W-2, you have two dependents, and your refund is $6,000, and they're charging you $700. That's predatory lending. The reason why I say that is because some preparers prey on the fact that you all don't know what we're doing behind the computer. But ask questions. Why is it that it's so high when the average cost for a regular 1040 with one W-2 is approximately 175 to 225? In the state of Florida, we don't pay state taxes. So why are they charging you so much money when the average price is between 175 to 225 for a basic tax return? So if you were to say the 225 to the $600 price that they're charging you, why? How is that justified? It's because they say they're giving you an advance. The average bank, which is Republic Bank, that's who I use, they charge us $47 for a bank product. And if you have an advance, they charge us an additional $80. So the 47 plus the 80 is what, 120 some odd dollars? So they're charging you $400 extra for a charge that we're being charged at the most $100 extra.
Wow.
Be careful.
Wow, that's crazy. That's crazy. So seeing that for something that on average you're probably, you yourself as a processor paying maybe $150, they're upselling it an additional $500-$600 per
and
week.
you're happy because, hey, I'm getting money I didn't have. That's your money.
Right.
Your money.
Right.
So, yeah.
Okay, that was a good one. So now let's talk about some of our entrepreneurs that have been able to take advantage of PPP loans and EIDLs and things like that. How are you predicting that tax season is going to have an impact on those type of products, like those that have received it and things like that? You have any warnings or preparation tips for those parties that have been recipients of those funds?
Absolutely. As far as how our tax returns are going to be affected, they haven't necessarily released that as of yet, but I will definitely keep you abreast as I hear. I'll let you and your audience know. But I will say, make sure that if you receive the PPP, majority of it, if not all of it, could be forgivable. Now, as it relates to entrepreneurs that received, or even independent contractors that received the PPP, if you applied for it to be forgivable and they approved the forgiveness, you can no longer expense those items. Again, do not expense the items that you purchased if they forgave the PPP. You know what they call that? Double dipping. Internal Revenue says we're going to either lock you up or fine you up. Because
that was a really, okay, so that was important. So let's say you go and you say, all right, fine, these 5-6 employees, right? And then this amount of a loan that you've given me, let's say it's $15,000, $20,000, $30,000, whatever number that you received. And you go ahead and get a forgiveness for it. But you also claim it on your tax return as an expense.
Correct.
This is going to create a tax liability that could possibly land you in the people's court.
That is correct. And we've seen it done. You know, a lot of people aren't aware that Internal Revenue does not allow you to do that. If it's forgiven, you can't still have that on your profit and loss statement. It has to be removed because it's no longer an expense. It was forgiven. So you also have to remove it from your P&L and pass that through shareholder distribution.
All right, sounds good to me. All right, Sam. Well, I think that we have given out a lot of value. Specifically, we've answered some questions about preparing your taxes if you're thinking about home ownership. We've talked about if you have received any of your PPP. I myself have talked about the gratitude that I expressed for you in terms of the level of accountability that you offer to me, making sure that I am not commingling, making sure that I am keeping pace with inflation as well as taxes, because those are two things that will bust open your budget in a way that you will never forget. Right? We covered a little bit about those write-offs in terms of eras and those things that people are forgetting to actually write off and to claim. Is there any other things that you'd like to add today?
Again, I want to reiterate for those of you who are not working, you're on unemployment, please use the next 60 days to find work, find something part-time. I don't want you to get to the tax table and you're disappointed because you're unable to get a refund since you had no earned income. The operative words there are earned income. Unemployment is not earned, it was given, okay? And then secondly, I want you to, all those entrepreneurs that receive the PPP or the EIDL, please keep a separate account, a separate chat. Even if you use an Excel spreadsheet, keep it separate. If you use QuickBooks, keep it separate. They don't want to see you mixing your regular expenses in the EIDL or the PPP loans. They want to see them kept separate. It's cleaner. It's easier if you get audited, and just be ready because they are going to be checking, crossing their T's and dotting their I's.
Alrighty, so I do hope that you have enjoyed this episode of Purse Empowerment TV. If you have any questions for Samantha, you can drop them in the comment section. We'll give you a few minutes as I load up my money machine, because every time that we connect with you, we want to make sure that you feel richer. We want to make sure that you feel valued for the value that you give and the value that we receive. So go ahead and open up your spiritual purse, your actual purse, your spiritual bank account, or your actual bank account, whichever one of them makes you feel richer, because I'm gonna give you some money, honey. Now you saw my money machine the first time, Sam?
Well,
Damn. See, now it be hating. It always hating. Gotta make me go back to my old ways. Look at that. Look at that. I just gotta do it the way that I've been doing it. All right, you ready, Sam? You opening up your purse? I'm gonna make sure you feel richer, valued for the value that you give. Alrighty, so that's it for this week. If there are no questions, we will be tuning in next week. One of the cool things that I'm going to be doing this month, Sam, is a gratitude brunch, right? Yeah, we're going to get together with Nsinga, and she's going to teach us how to do some cooking. Yeah, that's going to be fun.
And that's a write-off for her.
Yeah, that's a write-off for her, as well as the opportunity. One of the most important things right now is just to make sure that you have some healthy social connection. One of the biggest things that you have to protect yourself from is bad advice. So whenever you can come within the circle of healthy connection, as well as being able to add some value to yourself, you want to do that as frequently as you can. And that's what I'm doing through this episode. That's what I'm doing through money therapy. So those of you who have any questions specifically about building your budget, if you have any types of money concerns that you're not able to make it through, whether it's the management of money or being able to connect with your money in a way that it works for you, I'm going to go ahead and drop in the comment section. You can book a free 15-minute session. And we out, sis. I hope that you enjoyed this episode. Until next week. Ah!